Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hi, everybody. Hope you had a good week. Another volatile week. On last Sunday, sort of early hours in the Monday morning, Saudi Arabia have basically announced they're going to cut the price of crude oil from 1st of April, I believe, and also increase oil production after it has been have a meeting with Russia to try to ask Russia to cut oil production, but they disagree, and basically they're just having an argument. Saudi Arabia basically just threaten increase production and cut price and stuff. And then of course on Monday, that was right before even the Asian market opened. This sudden news causes the Asian market to crash, and then that basically go around the world and into US and lost almost 2,000 points. Then on Tuesday, Dow Jones went up just over 1,000 points because the U.S. president said he's proposing some sort of tax relief to help business cope with coronavirus. Then Wednesday, the U.S. Dow basically went down about 1,500 points. And it's just quite scary. I mean, the market just going down like this. And also, President Trump announced a ban for flight from Europe entering. Initially, with just Europe, excluding UK and Ireland. But then a couple of days later, he changed his mind as well. So basically, now all of Europe is not being a flight not allowed to go into US at all. And that caused part of it. This causes the 1,500 points down in Dow Jones. And then Thursday, we have another 2,000 odd points down. While in the middle of the day or later in the day, I'm not quite sure the hours, but the Fed announced is doing an intervention of 1.5 trillion US dollars, and basically putting 500 billions into the bond market to try to provide liquidity, and then another, I think, a billion just to shore up the rest of the economy, so to speak. And while that was announced, I mean, the Dow Jones was down about like more than 1,000 points, and then suddenly shot back up again. And then as the people digest the news, the Dow Jones continue to go down, and then end of the day minus 2,000, almost 2,400 points. Then Friday, I mean, it continue in early hours during the future market, and I saw the price actually went down to Dow Jones went down to 2050 area, 2,500, 20,500 marks, which is the 30% below the peak from early February, which definitely is, as far as I'm concerned, in my book, is a bear market. And then it sort of continued into Friday as well. So Friday when Dow's open was down, I think about 500 points or something. But then near the end of the day, U.S. President Donald Trump again came up with some news to say that he's declaring state of emergency for the whole of U.S., not just in New York or some part of the country, but the whole U.S. And Dow Jones basically went up about 1,000 points or so, probably a lot more than that within the last half an hour of the trading in the market. And then on Friday, Dow Jones ended up just under 2,000 points up. So it was for all of last week, basically continuation of 2 weeks ago. It just a lot of wild volatility, prices going up and down. I also say in the tweets, I think last week as well, that I won't be surprised seeing a 2,000 points, going positive, going up in the Dow Jones, because we have like 2,000 points negative going the other way around from on Dow Jones. So it's very much like for like, it's very much like back in 2008 when the market tried to find its feet, and at the start of a bear market recessions, and you get all these wild up and down days. but they don't happen, one day after another in a cluster, so to speak, and it's spread over a couple of months to do that. But we have this time for the past 3 weeks now, we have wild vision of price going up and down, and a lot of different news are knock basically the U.S. market as well as the world. Because of that, the market basically just gone down and gone really well. It's quite difficult. And then just before I start this podcast recording, Donald Trump come up with another announcement, and basically including that is a emergency cut now of the interest rate. I think that pulled the U.S. interest rate down to 0.25%. So it's more or less zero. So this is basically for the whole week, and for the past 3 weeks, more like panic, fear of the coronavirus spread. Came into close to U.S. and basically Italy got locked down, got infected very badly, and then America got scared. Which the virus has been around since December last year, and only like within the last 3 weeks, then Europe and America take notice. There's a lot of problems in U.S. as far as I'm concerned. Seeing from the outside that Europe as well as U.S. were not prepared for the coronavirus to spread so far so quickly, and basically run out of equipment and stuff. And more to me, it's more like a strategy. They don't have a coordinate strategy in place ready just in case the coronavirus hit over Europe as well as in U.S. So that's how it shows how each different countries within the Eurozone do different things. Slowly as the virus spread, now I think not just Italy, France is doing a lockdown as well as Spain. So all this is happening, and America is basically follow suit. So there's a lot of negative news going on. But what surprises me most is the Fed's basically coming with 1.5 trillion, bailout or intervention. This time, unlike 2008, we have a billion with B. It was quite a lot then. Now, 11 years or so later on, 10, 11 years later on, we start with a trillion. And it's not just one, it's 1.5 trillion, and that's promise of more to come. It's quite scary. So basically the problem, the bubble, the financial issue here, this time around, 10 years later on, is much bigger. After 10 years of bull market, if you count from 2009 coming up to 2019, now it's 2020, it's more or less 10 and a half years of bull market. Now we have a suddenly 30% drop in the Dow Jones in just about 3 weeks, which is quite scary. You have last week we have the issue with the carry trade being dismantled. So both the euro and the yen going back up, but this week it seems to have settled down a bit more now. The yen actually went on Friday as low as 108 yen to a dollar, and euro came down as well to I think it's 1.11 euro to US dollar, things like that. So that's came to come down a lot. But the other unfortunate news is gold on Friday got a big sell off. As well as Bitcoin last week, it's just gone down the pants. People was looking at it might be a rebound, but it didn't. And it gone down quite badly during last week as well. So overall, there's a lot of negative information. And then also this Robinhood app or trading app, it crashed last couple of weeks on twice now, heavy volume. So basically that app causing quite a lot of pain to a lot of people who would try to get on the market and couldn't because that app wasn't available. Just couldn't, from my point of view as a software developer, just couldn't handle the volume. Just too many people who try to log on, do something or get out and just couldn't. And the other things that I was watching, like I said before, is the bond market. I think what happened is one of the main reasons why the Fed comes in with the intervention in bond market is, from what I've read so far, is that when the stock market tanked, a lot of people went into the bond market to basically cover their assets as sort of safe haven. But when they try to get out, nobody want to buy because the price is too high and the yield is too bad. And then when people try to get out, the only people who are willing to come in to buy them up, so let those seller to get out, is like negative 20 or 30%. So basically, they market down 20 or 30% before anybody shows up. This causes a lot of issues, and there's basically no liquidity. So like in 2008, banks don't provide liquidity to each other because they don't trust each other, because there was a big chance that because of the subprime market with whatever each of the bank are holding, the banks will not be there tomorrow. So they don't want to lend to each other and find out they lose a big chunk of money because their counterpart disappeared, gone bust. This time is in the bond market. Basically, there's no liquidity there because people just, don't want to buy it at this rate or something. In the bond markets, the price is too high, and therefore the yield is very, very low. And when people try to get out, try to liquidate, they couldn't because nobody really want to buy at this very high bond price, a very, very low yield. So only people willing to buy is basically at a much lower level. So I think on Thursday as well as Wednesday, there was a lot of problem with the liquidity in the bond market. That's why the Fed sort of came in to try to help out, which provides a bit of liquidity there. But the problem for me is all this is just the same as 2008 or even before that, 2003, is there's always some sort of financial issue. There will be probably some regulation coming in later on as well to cover what had happening, just like the subprime market. But it's always the same financial issue. We are in the world, the government, successive government around the world just put too much money into the financial system, mismanage it, and then basically have a big bubble. And what the Chinese say is you might change the pot, the medicine is the same. So the problem is the same. It might come up differently. Last time it's a prime market. This time it's basically it's a bond market crashing. But the trigger is not that. It's basically coronavirus, the slowdown of economy around the world, and the subsequence of coronavirus effect in Southeast Asia. Now it's in US and Europe, and that basically scared a lot of people. And then the price just, the bond market as well as the stock market just gone down the pants. And it's like Dow Jones, I said before, it gone down like 30% in the future market on Thursday night, Friday morning. That I think is for now. I hope is the end of the move for now. And there's be some sort of bounce later on, but then people are still very scared at the moment. So I don't personally don't really see a V-shaped rebound right away. It's more a bit like if you look at Twitter chart, it's a big come down, drop down in price, and then it's just side trade for a little while and then slowly moving back up again. So I think that might be what happens next couple of months before another big things come down, because I think when middle of the year, latter part of probably first at the start of second half, people start seeing the figures coming out from US and from around the world. China's already given that their productivity gone down the pants, and the next we'll see it in Europe and then in US as well. So the effect probably comes out middle of the year, and there will be a lot of downward sales pressure. So as far as I'm concerned, my chart and my system, basically the long-term system, keep on telling me it is a bear market, and I will just continue to stay short. But in the meantime, I think for the next couple of months, it will be quite painful for me because I make quite a bit of money this time when the market suddenly dropped down. But there could be a quite sharp trace back, bounce back maybe 20-30%. I don't know, but that's over a month or two. And who knows what might happen? As far as my system is concerned, it's a bear market, and I stay short. And the little calculation I said earlier is basically I calculate from the peak of the Dow Jones price early Feb, which is about 20,500, to back to January, March 2009, which is around 6,500 in Dow Jones. So over 10, 11 years, you have roughly 23,000 pounds move in that 10, 11 years. And I basically calculate that if it's like a 30% down from the peak in February 2020, 30% below 29,500 is about 20,650. And if it's 50% drawdown, then it's around 14,750. So ultimately, at the end of this bear move, I saw looking at maybe 50% coming down. If it's as bad as, maybe the dot-com bubble thing may come down 7%, even worse. But who knows what might happen. As trend follower, I basically just follow it through. And we just basically see. But for the market coming down so much the last 3 weeks, short-term wise, is basically, I think, it's due to a bounce. We have dropped already 30% in the Dow Jones, and around the world is quite bad as well. But one thing worth watch out is China. Okay, the virus may have originated from there. Southeast Asia suffered the pain of the virus first, and now it's coming to Europe. But if you do believe, give a pinch of salt with the Chinese figure, but it looks like it's slowing down, as well as in South Korea and Japan, the death rate and the infection rate are coming down. So it looks like Europe and America probably suffer the virus for next. We all started by a couple of weeks ago. So I say within 3 months it should die down pretty well. As China now basically it I think started to do some stimulant on the financial market, and is lower some of the interest rate and put more money into the market. And I think the next bright spark could well be if you can trade it, the Chinese market. And so we just have to wait and see what will happen. And the main reason for me, doing this podcast, and especially this weekly Sunday podcast, is basically just show how trend following can work in action, so to speak. Now, remember, if you look at the podcast, it's only a weekly update. So you guys who may have been following it, it's more like you can use it as like weekly signals. And even using a weekly signal, you can still make quite a bit of money out of it. The trend is moving down at the moment, and I'm sure some of you probably make some money. Myself, others might get hurt. But I basically use this podcast to show you how using trend following you can safeguard your own trading account. Even if you trade your pension and stuff, you can help yourself rather than wait for the professional to help you. This is what I hate about this name about professional. Professional, in my view, is, let's say I tile a wall in the bathroom. I expect the tile to be done really nicely by professional. If by me, an amateur, I haven't done much of those things before. Only just watching some YouTube channels and YouTube videos, and now I can try, which I did, and it looks very odd. The shape is very bad, and doesn't smooth and that kind of stuff. But if I do pay a professional to do it, it probably costs me a lot more money. Yeah, which it does. But I expect it to last and look nice and everything else, which is what you would expect. But in the financial market, you pay the so-called professional, you expect them to make you money. But not, at least when they are not making, they see some pothole, they will at least stand aside and say, okay, get you guys out of the market and just wait there until the better time. So you might not make as much or not at all when the market is down, but you don't expect those so-called professionals to basically lose your money. I understand they have rules. The pension rules and financial rules to say you have to be so much money have to be in the stock market. But that is more, to me, is buy and hold, and regulation force pension funds to stay in the market. In a down market, it's not fun at all. So I sort of like I prefer. I learn from my own mistake that I take the financial well-being of my trading account or my pension with my own hands than relying on third-party people who one way or another, they may be professional, but they also have certain rules that lock them in, that they cannot do much. But one thing I definitely don't want to do is people lose me money, still want to charge me money, and I don't have even the privilege of losing my own money. At least I can learn something. I don't even know what all these professionals did to lose me so much money just because the market gone down and this competitor gone down. So I use trend following. because that's something that speaks to me most. And effectively, what I want to do is, take more control of my own financial account. And I find trend following really fits me well. And this is, the podcast, just what I found out there, YouTube as well as podcast, whatever. They talk about, not in using Forex, but not many people doing long-term trend following, showing you week by week, maybe day by day. But if they have the time to do that, maybe at least week by week to show you what they have done, how they do it, and what type of problems they face, and how they can make the work for them. And this is why I start this podcast, just to do this exactly same thing, because I found there's a lacking of that information. I wish somebody already done this before, so I don't have to do this podcast. And I just hope you guys will find it useful. But one thing I found this time, just like what I said a couple of podcasts ago, is really the best time to learn. In there may be a lot of panicking. A lot of people might have lost a lot of money, but I would suggest you to ask this question: how can I stop my account get decimated next time when the bear market happens? What can I learn from this fear of emotion, trading, fear of the coronavirus? It could be something else next time. I don't know. It could be oil price war. This is what we're having, or some other funny things that's happened. But every time when we have a bear market, it's always the financial market and gone wild. There's too much money in the system, and then somehow that money gravy train stops. And then when it stops or even pause, everybody get hurt. And from this bear market, we can basically see quite a number of things. I already said in a couple of podcasts ago, but mainly it's just emotion. Human emotion goes, both ways, greed as well as fear. And because of this, it can go quite extreme, make the stock market price go extremes. And if you have a system to actually benefit from it, you can make money. And you also see that it took 11 years, I said earlier, to make 23,000 from March 2009, when Dow Jones was 6,500-ish, and to early February 2020, when the Dow Jones was about 29,500. 23,000 for 10, 11 years. Okay, but in the last, not even a month yet, 3 weeks, we lost 30% of it, about 7,000 or something, 9,000. Basically gone from 29,500 down to 20,500-ish, on Thursday evening, Friday morning. So lost 9,000 in space of 3 weeks. And what I'm trying to say is, when the bull makes its case going up, is basically really is walking upstairs. But when the bear market happens, bears basically just jump out the window. And it really is fast, really quick. And if you don't blink, you probably missed it. The other thing is, when the price moves so fast, so quickly, there's people out there who only trade like a buy and holder, even using trend following systems, only on the positive side when there's a trend going up. They don't trade when the trend going down. To me, I feel it's very, it's not good to not trade in the short side. You can see the bear market when 30% down in Dow Jones in space of 3 weeks. You can make some money very quickly, providing you know what you're doing. I'm not suggesting that everybody should do short selling, but I think at least everybody should start and investigate that and learn, can they actually do in a small way, doing options and stuff, because you can definitely benefit from market going down. Why watch your account decimated on the sideline, and you have nothing in your toolbox to actually benefit from, or at least to stop the bleeding, so you can make some money at least in your pension funds gone down quite a bit. If your trading account can make some money, at least overall you're not that bad, worse off because of the bear market. And basically all this, the next things that you can see is this big large move up and down. Last time I already talked about it before. Back 2008, the large move is in the 800-ish, less than 1,000. But now, because the financial bubble is much bigger, we're seeing not 1,000 but 2,000, couple of thousand up and down. it's really, really scary. And also the intervention from the Feds. We're not talking about billions anymore. In the old days when 87, those kind of people, those kind of time, people were thinking, talking about the financial intervention from the government, U.S. government is in the 500 millions or half a billion kind of thing. So it's quite a lot. And then slowly you have billions in the last 2008 when the financial downturn, and now you talk about trillions. So the bubble just getting bigger and bigger and bigger, and basically it's quite scary. And all these up and down moves is basically is a way the market is telling you it is trying to find its own direction, so to speak. So up and down, up and down, and up and down. It doesn't know where to go, and we just basically see who has a better hand. The bear has a better hand, or the bulls have a better hand. And if you have a way to benefit from it, then I think that is the key. And also, I'm not sure, have you noticed last couple of weeks or so when the market coming down? Okay, this ferocity of the market coming down looks very quickly, but there's always something in the chart that tells you, or in the price that tells you something is not quite right. And if you look at some of the, not just the indexes, like maybe look at like Burberry. We've seen, already heard that the Chinese market is crumbling because of coronavirus. People are not buying, not coming out to buy things. And if you look at the Burberry chart, even I think back in December and January, the price already come down even before the Chinese lockdown. And you basically see the price come down and down. And if you have actually followed the price action and use your trend following system to go short, as the system said, you have earned a lot of money. You don't have to wait to only get in from middle of February when the market suddenly the about turn because the coronavirus went to Italy. You don't have to do that. The market already show its hand that Burberry is not doing right thing, and if you have follow your system, you have definitely make a lot of money. So one thing I definitely bear in mind is when both bull and bear market happens, the market always shows its hand. The price changes, and you have a system to capitalize that. It'll be great. So I hope you learn something from it. But from my point of view, all this learning came with a price, a big price, by blowing up my account, hurting me emotionally as well as financially, and it took me a long time to learn all this. And I hope you basically can take this away in your from the podcast and learn from it and use this experience. I know it's painful, but it is through pain that human being grows, and it's no different from any other skills. Trading is a skill, and you learn a lot more in your failures when the market's doing all this dumb thing. And especially also it tells you who you are, what you can tolerate and you cannot tolerate. Remember this, when you're making money, don't just think of the money that, the shiny things you can buy. Just think of the market can do about turn and then hurt you unexpectedly. You have to always ask yourself, and I always like this quote, I can't remember who it came from. If you look after the downside, the upside look after yourself, okay? I think Jesse Livermore said that before. Some other people, trader also say that before. And it's quite true. If you learn to be a bottom line kind of guy, if things don't work out, at least you know where you are. You don't get if you know at least your downside is your risk tolerance and what you can take emotionally as well as financially, then you're much more relaxed. You can trade the market better, and because you're relaxed, like Mark Dutner says in his books, you're much more easier, likely to follow your system, which you spend a lot of money and time to put it together. So I think that is a very useful thing to learn. If you are more relaxed, you definitely can do things better. That's just my view. I'm looking forward, basically, next second half of the year going to scare me. Initially I just thought it's just China having problem with lockdown and stuff, but if the same pattern going around the world as well, I think we're gonna have not just the travel decimated, now the oil get decimated, not just because crude oil because not many people are traveling, so the crude oil demand come down. But also now we have a price war between Saudi Arabia and Russia, and U.S. shale gas market is indirectly getting hit. I think at the end of the day, it is maybe a conspiracy theory here. I think Saudi Arabia just got to be fed up. Feeling, America is keep on pumping in more oil when the rest of the world heading by the OPEC and Saudi cutting oil prices, try to keep it up, and US is keep taking the market share. Just got to be fair and just say, okay, let's have a price war, see who blink first. And it didn't come, could have come in even worse time when we have a start of coronavirus coming to Europe, slowing economy, trade spat between America and China, and America with the rest of the world, so to speak. And now Saudi just basically punch America in the stomach. It's quite a body blow to America's shale gas industry, and because the bond market is in an all-time high, and also the virus coming in, I don't think some of the bonds that this energy sector have put up can actually be repaid. Or not just interest, actually the principal sum, and the banks will have to lump it and take it. And I think that's one of the reasons why the Fed comes in, try to put liquidity in, because nobody's going to provide that liquidity. Okay, even if the banks is helpful, which I think they will be, because if you have read the news between the line, back in 2018 as well as the last couple of weeks ago, Donald Trump invited the 6 biggest U.S. bank for talks. Last time when they have a talk back in 2018, that was like October, November time. I think about November time, December, and then you have the December rally from 2018, which was really tanking, and then suddenly, move up in end of December after Christmas, continuing from up to March and April time, which was quite amazing. And now we have similar things happening. I'm not sure will the market recover just as like back in 2018, December 2018, but definitely the banks probably been told by Donald Trump to, help the small guys, don't call in your loans, you have a worsened balance sheet, the Fed's going to help you through the repo market and the market intervention, or pumping more money into the financial market. That looks like that's what seems to be the case. So we just have to wait and see. In the bond market, definitely something that the biggest bubble. It's not even the stock market; it's the bond market, and that the effect of it is gonna, ripple around the world, because U.S. bond market is one of the biggest around the world. Not just the U.S. company put bonds up, to sell bonds in the U.S. bond market, but people around the world as well. So we just have to wait and see. And the other thing is obviously the gold price have gone down. On Friday or last week or so, it reached, I think on Monday, because of this oil price scares, it gone up to 1,700. But on Friday, it just gone down to like 1520 area, maybe a bit lower. So it's gone down more or less like $200 within the space of a week. Now, as far as I'm concerned, all this is because of forced liquidation by the market going down, and a lot of company have better far more or less, or hedge funds for the price of the stock market to move up. They're getting margin calls, and they have to cut all the profitable trades to cover their assets. And of course, gold has been, slowly it's making money, not spectacularly, but since there's a pot of money in there, gold get cut as well. So I think that's one of the reasons why gold moved down so fast. That's just my opinion. We'll see how it goes. But my feeling is in state of volatility, even gold market gone down, it won't be going down as much. I think I did some research and read some books about it already as well. 2008, when the gold price went down, the pound as well as the stock market, it recovered much quicker, and it didn't go down as much as the stock market. And of course, the gold gone up a lot more and back in 2010, 2011. So I'm sort of expecting something is happening similar to that effect this year and next year round. And this time, I don't think 1900 will be the ceiling. It will be much more because the financial bubble is so much worse. So I'm looking at something starting with a 2, so it's 2000 plus something. But that's just my view. Who do I know? What do I know? I don't know. One thing I know is I don't know anything. All I know is the price moved up, the price moved down, and I just stick my system to it. If the system said, here's a sell signal, I go in, or here's a buy signal, I go in. And I try not to be smart because I found doing trading over time, you try to be smart, try to be a student, try to be the guy who knows all. As we see from the recent bear market, something happens and knock your sixes, give you a curveball. Even though you know everything, you're the best fundamentalist. Somebody's have a argument halfway around the world and cut oil prices and just knock your sixes, knock your share price going down the pants. Or there's just some virus going around in the world and just suddenly spread. Initially, nobody's thinking about coronavirus. It's Asian thing, I don't look at it. It's fine. It's stay in Asia. But now, once it touches Italy, everybody, panic. And American panic the most. And now it's America now. It's in America now. And see how it goes. But I truly hope not many people get hurt this time. Not just financially, but health-wise, and I hope them recover quickly, especially America is a big country. China recover so quickly, but they use a lot of force, so to speak, force, staying home, force lockdown. I'm not quite sure how that will work in America and in the Western world, but we'll just wait and see. But if China can do it, I'm sure America can do that too, and I hope everything come out okay. Without further ado, next is the update of my trading sample portfolio. Okay, first of the bat is Apple. Short term is now changed to sell. Medium and long term is still neutral. Amazon is a sell. Short term, medium term is neutral. Long term is also changed to a sell this week. Australian dollar against US dollar. Short term is changed from a buy to sell this week now, and medium and long term are both sell as well. Brent crude and crude oil, WTI, both basically sells across the board. So both Brent crude and WTI crude oil are sell short term, sell medium term, and sell long term. No surprises that after especially this Monday. Big hiccup from Saudi Arabia, but I said before, the market already showed its hand before because of coronavirus, and then this just suddenly accelerate, the downward pressure to sell both crude oil and Brent crude. Next is DAX. Same as 3 weeks ago, basically more or less. Again, is showing its hands and sell across the board. Medium term is medium term, long term, short term are all sell. Dow Jones, similar things. With even this up and down gyration of price up 1,000 points, down 1,000 points, across the board still sell, just like that. So short term is a sell, medium term is a sell, long term is a sell. FTSE 100 is similar to Dow Jones and it's gone down a lot. Basically all sell across the board. If you look at FTSE chart, the sell, the drop, I think from a UK standpoint is much worse of than Dow Jones. I mean, FTSE, if you look at the chart overall, it's more or less quite a lot of sideways, hardly do any trend, and now this time this trend happens, and it took a big chunk out of FTSE. It's no wonder we have emergency cut here, following the America lead, so to speak. So for FTSE, short term, medium, and long term is a sell. Gold. Short term is a sell, medium term is a buy, long term is neutral at the moment. We'll just have to see how it goes, especially last Friday. Gold gone down, depends. Like I said before last week, it gone up to 17, almost. I think it's just above to 1700 as well, 1703 or something, and then it gone back down to 1519, 1520 on last Friday. So. Like more or less like a 200 pounds move. So we just have to wait and see what happens next. Hang Seng, short term is a sell, medium term is a sell, long term is also a sell. Nasdaq, that's a funny thing though. it did sudden rebound on Friday, almost 2,000 pound up, both Nasdaq and S&P 500. And short-term wise is a buy. So we just wait and see what happened on Monday then. Medium term for Nikkei is neutral, long term is a sell. Nikkei is sell across the board, just like Dow Jones and DAX. So short term, medium term, long term, all sell. Silver, this is a funny one, hardly doing much, and then now it's suddenly dropped much worse than gold. So short term is a sell, medium term is a sell, long term is a sell. It's not sort of surprising, People say keep on buying gold and silver. Silver is more of an industrial use metal, and when the general market is going down, silver they say take a biggest hit. So unlike all this gold, metal or other precious metal, silver seems to be taking the hardest hit. So across the board, short term, medium term, and long term is a sell. USD again, the Chinese yuan, no surprise here. Short term is a buy, medium term is neutral, long term is a buy. Basically, the Chinese yuan is weakening, so it's going up. Basically, you need more US yuan to buy US dollar, even though US dollar or US interest rate cut down quite a lot. But there's a lot more room even for Chinese government. They haven't done much yet. The surprising things though so far, you have thought China being the epicenter in Asia, it will cut very quickly. But it hasn't. It's just taking its time. It's trying to deal with the health issue more than the financial issue first. So it's a bit different from what the Americans doing. So we just have to wait and see. I'm sure, with the economy very slow, only start slowly coming back to work, and they got as much as, bond issue, bad loan issue, just like the rest of the world. Just like America, I'm sure they will follow suit by cutting this interest rate and pumping more money in. There was talk about it on Friday after market close in Asia. We'll just see what happens on Monday morning then. Next is USD against Japanese yen. Short term is a buy. Medium and long term is a sell. This is what I'm saying about the carry trade. That's been put upon us last couple of weeks. It's more or less stalled, and even with especially on Monday, if you see the USD against Japanese yen, the scare of the crude oil cut price, it dropped the USD against Japanese yen to I think 101.50, but then it slowly recovered. So during the week, basically recovered quite a bit. It gone up as much as 108, and so that's why the short term is a buy, but then medium and long term is still short, still sell at the moment. Next is British pounds against Japanese yen, sell across the board. Same as British pounds against USD, sell across the board. British pound against USD, you've probably seen it if you're tracking it. It's gone down to as low as 122. So $1, against the US dollar is 122. So it's quite low here for historic standard. I think last time we went there is like when there was a Brexit, Theresa May handing the Prime Minister role to Boris Johnson. I think that was 122 then, very low. And of course, this interest, this forex pair have gone up to 135 before. After the recent election, when the Conservative took a majority of 82 seats, but then it seems like all come down now because of the coronavirus and also because of the emergency rate cut. Just have to wait and see. But historically, British pound against USD at this juncture is very, very low. And out of Asia, a lot of Chinese is actually buying it because just like America, Chinese in both China as well as in Hong Kong send a lot of his children to US as well as into UK to study. So with the price of your British pound so low against the Hong Kong dollar and Chinese dollar as well, there's just basically increasing. That's why the chattering I heard in Asia, in Hong Kong, a lot more people buying British pound over there. Next is Bitcoin. Like I said last week, short term is a sell, medium term is neutral, but now even long term is a sell. So this is a funny argument people keep on saying. Bitcoin is a store of value, and I will just do as well and even better than gold. But look at what happened to gold. Gold got decimated. It came down 200 points, $200 and so, but it did make a new high for this year anyway, 1700. But look at Bitcoin. It gone down the pants. It did a rebound on Thursday or Friday morning. But on Thursday, I think it went down to like 4,500 marks, and then it did turn about 1,000 points or something, backed up to 5,000-ish at the moment. But the argument that Bitcoin basically is going to be paid currency and it's a store of value, I think that argument is out of basically shot to pieces. It going down the pan just like everything else. And at the moment, as far as I'm concerned, Bitcoin is a sell for me. LTL, which I introduced about 3 weeks ago, just keep an eye out for the bond market. The LTL ETF basically tracked the 20 years plus U.S. Treasury iShare is sell now short term, but long term, medium term still buy. But you see what I said earlier in my podcast, the lack of liquidity in the bond market, it shows up. I mean, remember last time 2 weeks ago when the stock market's gone wild with fear, and the bond market gone up and gone to as low as the yield was 0.33%. I think that happens on Monday. Then now suddenly it seems to go in reverse. Basically, people think below 0.5% is way too low to yield. They want to get out. The bond yield, but U.S. bond is very high in prices. They want to get out, get the money, but then nobody's on the other end to catch it. And so now this time the Fed comes in to put money in the bond market, just help these people getting out. So a lot of people getting out, not really buying, and it shows up in the LTL curves as well as the share price. So short term at the moment is a sell, medium and long term still waiting and still on buy. So we just have to wait and see. So if you have been listening to my podcast, the weekly update for past 3 weeks, you see the market basically gone, all sorts of different places, and suddenly, end of February, early March, it's just all gone down the pounds, everything reversed, sell. So it basically this like slowing down now, and like I said before, the Dow Jones have more or less down 30% now. So I would expect some sort of rebound, but what do I know? It probably slowly comes in, and probably next couple of weeks you see a lot more buying signals coming out from my trend following system. But now basically you can see, sit back and look at it. I'm looking at the all my tracking so far on this for this podcast. There's a big sea of sell back in early March, and now slowing down, and we see how it goes. But trend following definitely is working for me. It basically did about 3 weeks ago, and just continue to sell. Most of my position, well, I think all of them now, has been in profit. Some year I got hurt before, but like I said before, so long as I follow my system, I'll make my money back and cover my losses, and that's exactly what's happening. Who knows what's happening next? It's not even the first quarter of 2020. Haven't even finished yet, and it's all these things happening. And if this continue, we'll have a very, I don't know if the word exciting is the right word, but it's a very difficult, I would say, difficult year. Price dropping down. In a way, I don't really like to make money when the market is going down, but since I'm a trend follower, I learned to use both hands. So I would make money when the market go up. I learned to make money when the market go down. Psychologically, I don't like it. I don't like seeing people losing, especially my friends and close one who are losing money on the stock market. But I basically say, hey, there's a trend following here that can help you to benefit and make some money in the downtrend in the stock market. Trend following is the key for me. I think it will be useful for people basically learn a bit more about trend following, and at least they got this tool in the toolbox to do something about it. At least it's an option. That's just my view, and I hope this podcast and all of my podcasts sort of showcase and can benefit you and tell you how you can do trend following and take take a leaf out of trend following, help you to make money. Anyway, here's the end of my podcast, and I hope you like it, and I'll speak to you next week. Bye for now.